Futures are the best asset to day trade, and in this video, I'm going to prove it to you. And there are a lot of reasons. So stick around, get comfy. I'm going to break down every single reason I believe futures are the best, and they're in no order. But what I do know is that at least one of these things is going to make it so that you can't trade anything but futures. So hang tight. Now, if you're like me, you like to trade. You might not trade every moment of every day, but you do want the ability to, just in case you see a move that you like. Futures are incredible for this. They are trade basically 23 hours a day. There's 1 hour where it's closed and it kind of resets. That's 1 hour. It trades 1 hour after the stock market closes. And then after that, so I'm Central Time, it's 4 p.m. to 5 p.m. If you're Eastern, it's 5 to 6. And then you can start trading again for the next day, essentially. This, in my opinion, beats the stock market because there are oftentimes a lot of news and events that occur in the evening that shift the way the market is going to respond. So market could be going up, news comes out, boom, we've got a crash. You can take advantage of that because the market's actually open with a lot of volume. And we'll talk about that a little bit later. So it trades 5 days a week. We get Sunday is like a half day, opens at 5 p.m. Central Time, 6 p.m. Eastern Time, and it trades into the night all the way through into Monday to Friday. It's open on holidays. And so what this turns into is like you have Christmas Eve. You even have a little bit of action on Christmas, actually. But basically, any holiday, futures will be open to trade. There might not be a lot of volume, but if you're doing nothing, hanging around and kind of bored, get on the charts, start making some trades. Just like crypto, but with just a little bit more volume so you can trust what you're seeing and not gonna get wiped out. So that's number one. Availability is incredible and crucial for futures, and it's one of the reasons why I love futures a ton. Tax benefits. Almost nobody talks about this, and it might be the single most important thing about futures as to why it might be the best thing that you could ever day trade. Now, here's how this works. When you trade futures, let's say you make $100,000 in a year. Here's how this is broken down. You have ordinary income, which is taxed at your overall tax bracket. So let's say you work a job, you have a W-2, and let's say you make 100 grand at your job and you make 100 grand day trading. That'd be pretty cool. So you have $200,000 of income. Well, your tax bracket will be based on $100,000 at your job, plus or minus your deductions, 401k, different taxes you might pay, contributions, whatnot, okay, HSA, all that good stuff. And you have that set of money, and then you've got 40% of what you made. So $40,000 will be added to that. So essentially you'll make 100,000 plus 40,000 minus a couple deductions. That would be basically your tax bracket. That's how much money you made. You look at your bracket, you're married, you're single, get your standard deduction or your itemized, whatever you want to do. You look at that and you say, okay, this is how much money I'm going to pay in taxes. Long-term capital gains are completely separate. They don't look at your actual tax bracket unless you make over a certain amount. You basically pay 15% unless you make a much larger chunk, then it's 20%, but it's still really low. And so what you'll have is, let's say in this situation, you have 140,000 plus or minus. Let's call it 110. So that'll put you at like 24%. I've looked at 2025 brackets yet. That puts you at like 24% taxes. But you'll have 60%, so $60,000 will be taxed at 15%. Okay, 60% of your gains from futures will be taxed at a lower rate, 15% or 20%. Now, why this is incredibly crucial is, let's say you want to make day trading your full-time job. Well, it's not about how much money you make. It's about how much money you keep. That's what separates, I think, people who have a lot of money and people who don't have a lot of money. Everybody receives money. Not everybody keeps it the same. And so futures give you the ability to still day trade, to still be in the weeds and having a ton of fun doing this thing, but you also get to keep a lot more of your money. And it's not covered because I don't think a lot of people fully understand the impact of this, especially when it comes to taxes and paying a lot in taxes. I've had to pay a lot in taxes every year for years now, and it's obnoxious, but futures are incredible for this. Okay, so when you trade futures, you make $100,000, 60% of that is going to be taxed at a separate bracket, which is typically lower than your ordinary income. Okay, now this gives you the ability, if you've ever heard of like people who own stocks at really small amounts and they sell them for way larger amounts, they pay way less in taxes. They might have made $3 million, but they're going to pay taxes on somebody who makes $50,000 because that's how long-term capital gains work, more like 85,000, but you catching on. Okay, so futures get taxed two different ways, and the larger chunk of this actually allows you to save a ton of money. It's not well known, but it's highly important. P.S. Former licensed financial advisor, but not a licensed tax advisor, so please consult with somebody who does taxes professionally. Being able to play both sides is highly important when it comes to day trading. Futures are for big and small accounts. This is something I didn't know about when I first heard about futures. I thought you had to have a lot of money to take advantage of the market. You don't. Let's go through a quick example and I'll walk you through why this is really important. So we're looking at the NASDAQ futures right now, and I'm on the mini. Now there are two sides. You have minis and you have micros. Whoever designed it did not think this fully through, but whatever. Minis are the larger ones. Micros are for the smaller ones. Now, if you want to trade one like mini, okay, you want to trade one mini NASDAQ, you need about 2,500 bucks in your account while the stock market is open, okay? And I'll talk about this in a second when it comes to margin. If you want to trade micros, you need about 200 bucks in your account while the stock market is open. What this allows you to do is still take advantage, but at different sizes. The best traders in the world can make money in any kind of market, but you need the right asset to be able to do that. And so that's why I believe futures are, again, head and shoulders above the competition when it comes to what you should be day trading so that you can protect yourself or hedge your portfolio. Now, futures, just as easy as clicking that buy or sell button to my top left here, incredibly simple to get this done. All you have to do is click the button and you can go short and take advantage of this move right here, or you can go long and take advantage of this move over here. Short down here, long right here. Now, this being as easy as it is gives you the ability to play both sides in the same day, sometimes even in the same 10 or 15 minutes, depending on what the markets are doing. What this allows you to do is when the stock market might be having a bad day, you get to capitalize without really having to change a whole bunch of what you're doing. And it's having a good day, you can just ride the wave going up as well. Okay. Now, I do encourage anybody who has enough assets to have both like day trading capital and long-term investing capital so that you can make money when the market's moving up. That's always really good. 2 thumbs up there. But when you're day trading, you need to be able to do both sides so that when the market is having a bad day, you can still make money and boost up your portfolio that might be losing money. But when the market's having a good day, you can kind of double up and take profits both sides. So another reason why I love futures is a very obvious one, but I think it still needs to be stated that we can make money on both sides without having to do a whole heck of a lot. Here's why that's important. No asset is untradeable at this point. You can trade basically anything you want as long as you have enough capital to use micros. Now, I'm going to break down micros and minis for the NASDAQ because that's what I trade. And so here's how this works. You need about 2,500 bucks in your account to trade one contract, one mini NASDAQ contract. You need 200 bucks in your account to trade one micro. Now, here's how this works when it comes to actually making money is futures are in points, okay? And it's basically dollars, honestly, but it's in points. And let me shrink this back here a little bit. And so the way this works is, let's look at this. I'm just going to draw from here to here. That is 30. Let's just go with make it even number. That's 30 points. Let's call this amount of movement 30 points. Okay. Make it nice and even there. What you would do when you're trading minis is you would take 30 times 20. Every point is $20 essentially, times however many contracts. We'll just use one contract. So 3 times 2 is 6. 30 times 20 is 600. You'd have made 600 bucks if you sold up here and held down here. Now, micros are basically a tenth. So 10 micros equal 1 mini. And the way this would work is now, let's say we're trading just 1 micro. Okay, we have this 30-point move. Well, 30 times 2 is 60. So we would have made 60 bucks on this move right here, trading 1 micro, and $600 trading 1 mini. Now, this really does scale up. And typically, when you have a smaller account, let's say you got a sub $5,000 account, maybe even sub $10,000 account, probably should just be trading 3 to like 7 micros. And then eventually you can switch over to minis as you have the capital to take larger trades that can make you more money. But that's how this works. So micros give you the ability to trade any asset and you don't need a whole lot of money, which I would say is a huge benefit when you're looking at trading options, you're looking at trading crypto. Sometimes you have to have, there's a larger buy-in that you have to use. And it just isn't super favorable. The other thing is that you can make a ton of money even with just a couple micros. You guys have seen me do it multiple times on live. If you haven't, you can go watch some of my old videos or older videos to check that out. But for the most part, futures give you the ability to be flexible and make a ton of money if you have a ton of money, or still make a lot of money even if you don't have a lot of money. Another huge benefit. Now, if you ever traded Forex and then you've traded futures, you understand this concept very well with your spreads. Now with futures, you do pay a little bit more in fees as you have a commission and you have a spread, but oftentimes that spread is minimal to almost like not even noticeable. And so when you get into a trade, you can be at even for a while before being up or down. Different than in Forex where you might get into a trade and you've got a lot of room to run up or down to get back to even. And so with futures, essentially the moment you get into a trade, that's basically your spot. And then from there, whatever movement up or down, you are plus in money or negative in money, depending on where the market moves. This is a huge, I think, game changer for anybody who does trade Forex, because when you jump into futures, you realize that you just have to get your trade to go a certain amount to make a ton of money, not get your trade to go a certain amount to get back to even. It's a huge reason why a lot of people who trade futures after trading Forex never go back to Forex. Now, this is more anecdotal, but futures are growing. This is an asset class that is attracting more and more traders because it's very easy to use, very easy to operate, and you can make a ton of money. And so you're seeing more option traders come into futures. You're seeing more Forex traders and crypto traders coming into futures. Now, futures have been around for a long time. This is nothing new, but I do believe it's growing in popularity and it's getting into the zeitgeist of like, we should just trade futures. With that, I think we're going to start seeing more assets, even like potentially stocks, get moved as like futures that we could potentially trade. Now, I could be way off on this. I could be years away from this. So don't like quote me. I don't have any inside information on this, but I do think that we're going to start seeing more assets turn into maybe futures that we could trade 23 hours a day, 6 days a week. So I think futures are growing. It's one of those asset classes that maybe you want to be more involved in than not. Crypto's great, but outside of like the big couple crypto coins, everything else is kind of junk, and it's hard to grow when most of what you got going is junk. Futures are the exact opposite. So stick around for futures. I think that we're going to see some interesting things coming. I don't have any like prop firms are maybe the biggest reason that I think futures have exploded in their popularity over the past couple of years. Prop firms or proprietary firms allow you as a trader to trade their money, assuming you have the skill set to do so. How it works typically is you pay a little bit of money to take a test. If you pass that test, you then can trade a firm or a different company's money and you keep a healthy chunk of the split. Typically it's 90-10. You keep 90% of what you make, they keep 10. Win-win for both sides. They collect a fee for you paying and a fee for you activating your account. And if you're really good enough, they take 10% without having to do anything and you keep a huge chunk. That's what prop firms are for. That's what they're designed to do. Now, the way that they can work is you can have 1, 2, 3, 4, 5, up to 20 different accounts that you could potentially trade. So you could make a little bit of money in one account, but make a little bit of money across a ton of accounts and really grow your ability to earn a ton of money without having to actually use any of your own money, OPM, other people's money. Prop firms are maybe the single biggest reason as to why futures have taken off, and as an asset class, why they're incredible to continue to trade. Now, we'll talk about regulation in the next little clip here, but I do think there's going to be some changes when it comes to prop firms, just the way that they operate. But for the most part, they're US operated, they're highly regulated, and they do allow traders, for the most part, the ability to trade capital that they would never otherwise have access to. Trading accounts the size of 200,000, 300,000, even just having the ability to trade a $50,000 account, most people aren't able to go and pull out 50K just to trade futures. And the best part about prop firms is that when you're good enough, you're just buying these evaluations, you're buying the tests, is what they're called, evaluations, but you're not risking any of your own money. And so if you blow up an account, it doesn't come out of your pocket necessarily, just a little small fee, but then you get to restart. Instead of having a $5,000 or $10,000 account, when you blow that up, your net worth literally shrinks $5,000 or $10,000. So prop firms give you the ability to not risk your own money, use their money, keep all of the upside, and scale. So they're I think a wonderful leverage point for trading this asset. Now, one thing to clarify is that when you trade with prop firms, you're a contractor, you're 1099. So the tax benefits we talked about do not apply to prop firms. So that's something that you have to work through. And depending on the size of your income, how much money you're making, and how much money you have right now, one could be better than the other. I'm leaning more towards trading my own cash rather than prop firms for multiple reasons, and we can talk about that in a separate video. But you'll have to balance, those trade-offs. Taxes are great, but at 1099, you're essentially your own business owner, so you can write off things like your computer, your phone, your Wi-Fi potentially, where you trade from. If it's at a home office, you can do that, and any other of like the fees that might come along with trading in a prop firm. Again, talk to a tax advisor, but for the most part, that's kind of how it works. So a bunch of trade-offs with prop firms, but they are a wonderful way to get access to a ton of money and make a lot of money without having to risk any of your own capital. Another anecdotal but still important part about futures and why I think they're a great asset is you never have to actually sell your position. You can just continue to hold with no pressure or no time decay. If you're an options trader and you're like, should I trade futures? This is a big deal because you could be right on your trade, but because of your decay of that option, you have to sell or get rid of it or trade it down or buy more and basically extend and pay a little bit extra. With futures, you don't have to necessarily do that. You just hold on to your position as long as you're not going to blow up your account or hit your margin, which could happen. You can just hold on forever and let it run as long as you like without having to worry about that thing losing value as time goes on. Again, a small thing, but really important for a couple of you traders who like to hold your positions for a longer time, and you're typically right. It just takes a little while for you to be shown that you're right. Futures can be an excellent way to build capital and do so and hold on to trades for a long period of time. So that sums up why I believe futures are the best day trading asset. And if you in the comments have another reason as to why you agree or even you disagree, like comment below. Maybe I'll make a new video on why you're right or you're wrong, and we'll have a good dialogue. But this is why I believe futures are the best day trading asset that you have access to, especially if you're in the United States. So take advantage, use it. If you haven't, give it a shot. And if you have and you do trade futures, you're thinking about going somewhere else, like really sit down and analyze what's going on and think if the upside of futures is still lesser than the upside of whatever you're going to pivot to. So I'd love to have it back and forth with you guys. If you've stayed around this long, make sure you like and subscribe. We'd be happy to grow this community with you involved. And again, make a comment below if you like the list. If you think the list is ass, you think it sucks, then like let me know too. I might tell you you're ass and you suck, but still have fun with it. Anyway, I will see you guys. Have a great one. We'll make some more videos coming up. Peace.